Welcome back, loyal viewers, to our financial education channel where we endeavor to demystify the world of finance for you. Today we tackle a potentially alarming subject that's been the talk of the town recently. What occurs when a bank fails? We all recollect the unforeseen closures of Silicon Valley Bank and Signature Bank in March 2023. It raised a slew of inquiries about the safety of our hard-earned money. But worry not, in this video we'll talk you through the entire process, including how your deposits are safeguarded, the fate of your money, and tips to secure your finances. So sit back, make sure to hit that subscribe button if you haven't done so already, and let's unravel the mystery of bank failures. Have you ever pondered what exactly takes place when a bank goes bankrupt? Is the money you've worked so hard for secure? In this video, we'll go over everything you need to know about failed banks, the role of the Federal Deposit Insurance Corporation, and how you can safeguard your savings from being lost in the event that a bank fails. Join us as we investigate the factors that lead to the collapse of a bank, the effects that this has on depositors, and the actions that have been taken to protect your money. So let's dig in. But before we get started, let's pause for a second to discuss the significance of transitions in screenplay. The flow of a tale can be improved with the use of transitions, which let us move from one scene to the next without any interruptions. In the video that we are going to upload today, we are going to use a variety of transitions in order to keep the information we present to you, our audience, orderly and interesting. Now that we've established the context, let's move on to our initial subject of discussion. The question of why banks go bankrupt. Failures of banks can be caused by a wide variety of factors. When a bank's asset falls below its commitments to creditors and depositors, this is referred to as the bank becoming insolvent. This is a very common reason. A bank's capacity to maintain its financial stability is put in jeopardy whenever it makes loans or investments. If such investments are unsuccessful, or if borrowers do not pay their debts, the bank will experience financial instability. In addition, when consumers learn that a bank is having financial troubles, they may panic and withdraw their money. This scenario, which is referred to as a bank run, might further contribute to the failure of a bank. If your bank were to fail, what would happen then? Let's find out. The Federal Deposit Insurance Corporation will step in to protect depositors and creditors in the event that a bank fails. The FDIC issues a statement announcing the bank's closure and assumes its role as receiver. They have as their principal objective the utilization of the bank's assets for the purpose of paying depositors and creditors. The FDIC searches for another bank that is willing to acquire the failed institution in the majority of cases. In the event that the switch is successful, your account information will be moved to the new bank. As part of the changeover, you might receive new debit cards as well as new checks. However, what if no bank decides to take over? In that event, the FDIC will make good on their promise to reimburse depositors as quickly as they can. Limitations on accounts and the FDIC insurance. Now that we've established how important the FDIC insurance is, let's talk about the limitations that come with it. Your deposits are protected by the FDIC up to a maximum of $250,000 per depositor, an account type. This means that the $250,000 limit applies to each account separately if you have numerous accounts at the same bank, such as a checking account and a savings account. It is essential that you keep in mind that if you go above the insured limit, you run the risk of losing the funds that are in excess of the amount. However, if another financial institution were to purchase the failing financial institution, your money would be moved to the new institution, ensuring that it would remain safe. Examples of failed financial institutions. Let's take a look at some notable bank failures in order to gain an understanding of the impact that they can have. In 2023, Silicon Valley Bank and Signature Bank abruptly ceased operations, causing panic among customers who withdrew their funds after hearing about the financial difficulties on social media platforms like Twitter. The news of the bank's precarious financial situation spread like wildfire across social media platforms. During the global financial crisis that began in 2008, the largest bank failure ever recorded occurred at Washington Mutual, which had assets totaling $307 billion. As a result of JP Morgan Chase's acquisition of WAMU, the security of customer assets have been improved. In 1984, the Continental Illinois National Bank and Trust Company, which was one of the largest banks in the United States at the time, ran into some financial difficulties. Because of the widespread spread of misinformation, there was a rush on the banks, which led to massive cash withdrawals. Will you experience financial losses if your bank closes? Now let's talk about a really important question. What happens to your money if the bank where you have your accounts closes down? If your deposits are less than the maximum allowed by FDIC, which is now $250,000 per depositor and per ownership type, then you will not lose any of your money in the event that your bank goes out of business. Nonetheless, it is essential to have an understanding of the different types of accounts that are covered, as well as the significance of the limit. What should you do if you have more than one account? What are the repercussions of maintaining several accounts at the same financial institution? Let's find out. You are not completely protected by FDIC insurance if you have numerous accounts, such as a checkings account and a savings account, with a combined balance that is greater than $250,000. The maximum of $250,000 applies to each depositor, in addition to each account type. However, if you have a joint account with your spouse as well as an individual account that is different from the joint account, you will be fully protected. This is because joint accounts and individual accounts are considered to be independent ownership categories. Who buys a faltering bank? When one bank fails, it is common practice for another bank to purchase its assets. But what will happen if no banks come in to help? Within a few days, the Federal Deposit Insurance Corporation will send depositors who were insured their money if the failing institution is not acquired by another bank. The Federal Deposit Insurance Corporation's top goal is protecting the safety of your money. What happens to direct deposits and uncashed checks? Let's talk about what happens to your direct deposits and checks that haven't been cashed in case your bank goes out of business now. Your direct deposits will be automatically transferred to the new financial institution if your bank is acquired by another financial institution. The Federal Deposit Insurance Corporation will make arrangements for the temporary management of direct deposits in the event that there is no acquiring bank in order to eliminate delays for recipients, such as those receiving Social Security benefits. Checks that have not been cashed and payments that have been set up automatically will be returned as unclaimed, which is a sign that your bank is closed. On the other hand, you will have to talk to your creditors and lenders about alternate payment arrangements. Are you able to get into your safety deposit box? How would you get into your safe deposit box if the bank where you kept it was closed? The actual location of safe deposit vaults can be found within the premises of a bank branch. If your bank is acquired by another financial institution, the branch where you keep your goods should reopen on the next business day, giving you the opportunity to reclaim them. In the event that no acquisition takes place, the FDIC will write you a letter including instructions on how to retrieve your belongings. In conclusion, despite the fact that failed banks may create headlines, the majority of clients' financial situations have not been negatively impacted. Your money is safe as long as you do business with an institution that is covered by a Federal Deposit Insurance Corporation and as long as you maintain your deposits below the maximum of $250,000 per ownership category. Keep in mind that even though you may experience some minor disruptions, your money is safe. We are grateful to have you among us today. We have high hopes that watching this film has enlightened you about the dangers of bank collapses, the FDIC insurance, and the need of protecting your finances. Maintain an informed state of mind and make prudent choices regarding your finances. Until next time. In a nutshell, while bank failures do stir up a media frenzy, the financial impact on customers is usually minimal, thanks to institutions like the FDIC. If your funds are below the insured limit and you're banking with an FDIC-insured institution, your money is generally safe. In the event of a bank failure, yes, there might be slight inconveniences, like waiting for a new debit card or readjusting recurring payments, but in the grand scheme of things, you're safeguarded. We hope this video elucidates what happens when a bank fails, and if you found this video informative, don't forget to hit the like button, share it with your friends, and subscribe to our channel for more insightful financial content. Until our next video, stay financially savvy.